Welcome to this very special edition of the KJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through the industry insights, information, or simply learning from them. And today we have Gino Barbaro. He is an investor, business owner, educator, entrepreneur, and podcast host. Welcome to the show, Gino.
AJ, thanks for having me on. How you doing this morning?
I am doing fine. Hope you are
Good.
also doing very good because with a lot of success behind you, you have got 4 shows. So that's also a great thing to learn while understanding about your profile. So wonderful. Welcome to the show once again, Gino.
Thank you.
Wonderful. So our talk will not only benefit, I am in India, you are in the US. So not only in India, but a lot of people across the globe, we will your mastery will help them understand multifamily real estate mastery through you. So my first question to you, Gino, is to understand from you your journey from starting in real estate to building a multi-million-dollar portfolio.
Well, my journey started out when I got out of college. I got into the restaurant business. My father owned a restaurant, and at the age of 24, we purchased the restaurant together. And I did that business for years. My father passed away in 2007. And I, at that point, asked myself, am I living his dream or am I living my dream? And I realized that I love to work at the restaurant because my father was there. And when he passed away, there was a void. And in 2008, I picked up that book by T. Harv Eker, Secrets of the Millionaire Mind. And I read that book, and you talk about mastery. I wasn't mastery at anything. I was not responsible. I was blaming everybody. I was blaming the economy. And after I read that book, it seemed as if I had an awakening. I had a shift. I met my business partner, Jake, in 2009 at the restaurant. We partnered up in 2011. It took us 18 months to find that very first deal. It wasn't easy. I mean, mastery takes a lot of work, a lot of effort, a lot of focus. And after that first deal, Jake and I continued to partner up. And to this day, we've purchased over 2,200 multifamily units. But it didn't start out in real estate. It started out in the restaurant business. And it started out with the desire to be able to feed my 6 children. I mean, my kids like to eat like everybody else, and it's not cheap to feed the kids. So for me, the first priority was finding something that I really enjoyed. Second priority was learning it, and like you said, mastering it. And then the third one, I guess I got lucky. I met Jake, and I guess the rest is history, AJ.
Wonderful, wonderful. Your restaurant business is a lot of food for thought for a lot of people, from restaurant business to getting into real estate. That's wonderful. So now, you talk about, value-based decision making. How has this contributed to your success? Because in real estate, you can't. People think there are not. People do not talk about values. It's all about profit and getting more and more profit in the real estate business. So help us about your value-based decision making approach.
My mentor, Rick Sapio, introduced me to the idea several years ago. And for everybody out there, you're making your decisions based on your values. You may not know it, but subconsciously, you taking a job, you getting into real estate, you getting married, having kids, they're all values. So if you don't know what your values are, go out there, sit down after you listen to this and say, well, what are my values? And for me, it was real simple. I was a person of integrity. My values were based upon my family. Once again, my 6 children. Hard work, like my father, dedicated. All of a sudden, I became responsible. Those were all of my values. And when I went to look for my business partner, Jake checked all those boxes. At the time, I didn't know. I was drawn to him, and he was drawn to me. And every time you make a decision, you should decide upon, does it fit your values or if it doesn't? Because if you're going towards something like real estate and you're building this empire, but it doesn't really fit your values, once you achieve it, are you going to feel successful or happy about that? And I'll give you one quick example. One of the reasons why I did not like the restaurant as I got older, and I had to reflect upon this, was, once again, I love spending time with the family. But in the restaurant business, you're working every weekend, you're working on the holidays, and there's less time for the family. So there comes a point in my life where I said to myself, I'm making more money, I'm doing pretty good in the restaurant, but why do I not feel happy? Why do I not feel successful? And then it dawned upon me, it didn't fit in alignment with the values that I wanted to live. So go out there, decide what your values are, and don't just write them down and say, oh, I want to be this person. Who are you? What values do you want to live by? And then start making decisions based on those values, whether it's about investing in real estate, whether it's about selecting a business partner, whether it's about buying a deal, whatever it is, every decision should be based upon the values that you're living.
Wonderful, wonderful. And that is what you are, teaching a lot of students, a lot of people across your community, across the places that you do your business. But in terms of the real estate business, the way real estate business is in today's time, what would you advise people who are looking at investing in real estate? How should they look at real estate business? As many people think of it as quick money. Some people think also as side income, passive income. Can it be all those things for a big, or is it a lot of hard work, full-time job, full-time work? Help us understand for those people who are sitting on the fence and looking at this sector.
That is a great question. I love the name of your show, the show we have here, Multifamily Mastery. The first thing you need to do is to master yourself, to understand what you're trying to accomplish. If you are a doctor, a lawyer, a high-earning individual, and you don't have time to invest in multifamily and do it full time, well, you can go out and partner with other people. You can invest money as a passive investor, but you need to understand the business as if you were investing in it full time. The reason why I love real estate, and specifically multifamily, it's not only an investment, but it's a scalable business. Our very first deal, we had 25 units. We didn't have 25 single family homes all over the city running around like a chicken without a head. They were all in one location. We had a resident manager. We were able to hire employees. On our second deal, we had 60 total units. We were able to start scaling up. And this is just 2 locations. So all of a sudden, if you can think of it as every deal that you do, it's a little cash machine. It's a little profit center. You are investing in real estate for the future cash flows of that property. And if you're really good at it, you're going to force the appreciation of that property. And if you only look at it from the lens of being a landlord and doing the work, you're missing the bigger picture. You want to look at yourself as the asset manager. You're managing these assets. And that's the thing that I love about multifamily versus single family. And people say, well, how do I start? If you need to start small, great. Start small. Think big, but start small. My very first deal before Jake, I had a 4-plex, a 4-unit property. I needed to prove to myself, and I need to have proof of concept that it worked for me. And then I started looking around and saying, well, a lot of these people in real estate really aren't that smart, myself included. It doesn't take a lot of brains to do real estate. It just takes a lot of dedication. It takes a long-term commitment. It takes responsibility, and it takes the understanding of certain business principles to become successful in the business. Once you can master those, we teach buy right, manage right, and finance right. Once you can learn the 3 foundational pillars that we teach, and you go out there and you understand what real estate is supposed to do for you. For me, I wanted to leave my job. That was my main focus. So how did I do that? I partnered up. I found somebody in a great market. We started investing. I kept reinvesting all of the profits from my real estate into buying more deals, Now, if you live a great lifestyle and all you're looking for is retirement income, you'll take a different path, but you can use the same vehicle that I used.
Right. So how do you scale up your business? Suppose you buy some property, then you buy some more. How can you be so certain, okay, this is the direction I am taking, and this is the direction my business will certainly go? How do you, de-risk also at the same time? Because anything can happen. So both in terms of scalability and also in terms of de-risking, how do you look? What should be the mindset of anyone in real estate? What is your learning about this?
Wow, that's another great question. What I would say is we wrote a book called Creative Cash. If anybody wants a copy, email me, Gino at jakeandgino.com. It answers AJ's question. We've created a concept called the 3 pillars of real estate. I wish I could get into it now because it's really long. But when you're de-risking real estate, you need to understand that there are market cycles. And if you don't know the market cycle of where you're in, of what to buy and when to sell, AJ, it's important. You can always buy real estate at any part of the market cycle. Unfortunately, you can't always sell real estate. So if you don't have the proper debt on your real estate and the debt comes due, because in commercial financing, there's some different things than residential, your debt comes due and the market is down and you can't sell, well, you're in trouble. But if you can ride it out, if you have longer term fixed rate financing, which is what we have, then you're able to hold on to your portfolio. So you need to understand market cycles implicitly, and you need to understand that there's an exit strategy. You're not always buying a deal and saying, hey, I'm going to hold this forever. You may, that's a great strategy, but you may buy a deal, create equity, pull that equity out, and buy another property. That's how we started out, Jake and myself. We were able to refinance out over $25 million of our portfolio right now. We didn't take that money and put it in our pockets. We just reinvested it and bought the next deal and bought the next deal. And I think it's important to understand that when you start doing something and you start doing it and you're involved in it, you will get better over time. And that's why it's great to start small. Small properties, small problems you can handle. On that 25 unit property, there were 25 residents. If we had 3 or 4 vacancies, we could manage it. And then from there, we took a 36 unit property. And then our third property was, for us, massive. It was 136 units. But I will promise you, if that first deal was 136 units, it wouldn't have turned out the same way. It would have been a lot different of a journey. So don't go out there and listen to all these gurus. Go big or go home. Go as comfortable as you can do. And the last point that I would make is your behaviors are belief driven. If you can believe that you can do a 4 unit, you're going to take action. But if you're listening to everybody and saying, I've got to go really big, and you know you should, but you don't think you can do it, then you will never do it. So my ultimate advice is start small, learn the business, see if it's right for you. And I promise you, Jake was the pharmaceutical rep. I was the pizza guy. If the pizza guy and the drug rep can start buying multifamily, anybody can.
Absolutely. Absolutely. You make it sound modest, but it takes a lot of hard work and needs a lot of resilience, perseverance into this business. As you say, look, start small, think big, but then you got to get the right sort of an understanding of this all. And who better than than you, Gino? You people teach a lot of your students. I want to understand your 3-step framework and the 3 pillars of real estate that you teach your students.
What I would say with the 3-step framework, you can look at it from the lens of whether you're buying a business, whether you're buying a multifamily, or even a single family. You need to be able to buy the asset properly. You need to be able to finance it and the managed portion. I want you to picture a wheelbarrow. A wheelbarrow has 2 back legs. We call this back leg the buy right. Once you've bought the property right, it's fixed. Once you have the financing done properly, then it's fixed. 2 parts of the wheelbarrow are okay. If one of those legs is not done properly, your wheelbarrow is going to tip over. Now, the most difficult part of the 3-step framework is the manage right, which is the wheel. And that is in constant motion. And if you can take this over to if you're buying a business, it's the same thing as you're buying a business. You need to buy the business at the proper price. How are you financing the business? Are you using creative financing? Are you using an SBA loan? Are you going out and getting a loan at the bank? That needs to be done properly. If those 2 aren't done properly when you're buying a business, well, what happens? The business is going to fail ultimately. But even if you've done those 2 properly, now that you've taken over the business or the multifamily, you have that wheel. That's in constant motion, whether you're buying the business or a real estate investment. And the objective in multifamily is to raise the net operating income. You're trying to raise the value of the property by raising income or cutting expenses. It sort of sounds like business, doesn't it? You're buying a McDonald's franchise, you're trying to get the income up, and you're trying to lower expenses. It's the same thing in multifamily, although there's different strategies with rents and with taxes, insurance, but it's sort of the same thing. Once you understand that, then you take a deeper dive in what does buy right look like, how do you finance properties, and what does the manage right look like for you as far as scaling? Are you going to use third-party property management? or are you going to self-manage the property?
Right, right. To understand the success, about success into this line, what is most important for success? Are the right mentor, the right conditions, your smartness, or your mindset? Which is the most important part in real estate?
For me, understanding that the relationship that you have with money. I was son of immigrants, so I understood that I needed to save money. And for you to create wealth, you need to have to save money at some point in your life to be able to invest that money. And then I understood that continuing to invest and creating wealth, it was a pretty boring path for me, but I wanted to create wealth and legacy for that. So understanding the mindset is so important. Your relationship with money is important. The next one is, Carol Dweck wrote a book called Mindset. Do you have a fixed mindset or do you have a growth mindset? And it's in different areas of your life. You can have a growth mindset about your health, about the way you look, because that's something you love. But if all of a sudden you have a fixed mindset about business and about money, no matter what somebody teaches you, you're going to stop yourself. So adopt the growth mindset and say, hey, I am a lifelong learner. I'm not an expert. I was never born with any of these skills. Remember, AJ, I had one restaurant for over 20 years. And within 3 years, Jake and I had 500 units. I think the only thing that changed other than getting knowledge was my ability to say, lifelong learner, I want to be responsible. How do I learn? And you mentioned the mentorship student. I've invested hundreds of thousands of dollars. I didn't say I spent or earned. I invested that money into myself. And every dollar that I invested into myself has come back to me in various forms, whether it's relationships, whether it's deals, whether it's refinances, whatever it is. So you need to first start with your mindset. And then once you've selected the vehicle, that's when you go out and you find the person you want to learn from, because success leaves clues. And the last thing I would say is I went to become a life coach because I didn't know a lot of these questions. I didn't know the things that were confusing to me. I wanted clarity in my life. And I said, oh, let me go to life coaching school. It's great, personal development. But what that taught me was the skills that I needed to be able to ask great questions, to be able to challenge myself, to be able to become a better listener, to be able to become aware. These are all things that we needed skills in life, and they translate so well into business. And I just use those skills from life coaching to be able to actually help my mindset. So if anybody's out there stuck, not knowing where to go, they feel frustrated, Google life coaching. Go out there and find a life coach. Go out and talk to somebody and see where you are and set and create a plan with this life coach, because all they're going to do is ask you questions. Because AJ, Gino, you listening, we all have the answers within us. Sometimes we're afraid to actually say those answers. The coach is going to get out there and he's going to pull those answers, at least a good one, is going to pull those answers out of you. And once you say it and once you commit, that's all you need. And the final piece is the accountability. You need someone to help you, to hold you accountable.
Absolutely. There is much to learn from you, Gino, and there is much to learn from your books. You have written 3 books. I don't know if you have written more than that, but these books are, you talked about Wheelbarrow, you have written Wheelbarrow Profits, The Honeybee, and others. So I want to understand what are these books all about? Who are these books for? What can the audience learn from these books of yours?
I love The Honeybee personally because it was a book that Jake and I wrote about 5 years ago. It was about multiple streams of revenue. If you have a business, and that's what I love about multifamily, you have this investment, then all of a sudden Jake and I create a property management company. That's another stream of revenue that's attached to the multifamily. Then a year later, we create Jake and Gino, which is education, which is another stream of revenue. Then we create a syndication business, which is help to raise capital. That's another stream of revenue. And I think if you're listening to this and you're in the business world, you can create multiple streams of revenue that are directly related to your business. And I'll give you a quick example about the restaurant. I started this out in the restaurant because I said this brick and mortar, it's very difficult to go out and compete with the Pizza Huts of the world and everybody. So I wanted to create a brand. So for us, the physical business was the stream of revenue. From there, we started writing cookbooks, physical products. We started doing coaching videos. We started doing cooking classes. We were thinking about getting a food truck. We were doing backyard barbecues. We were doing weddings, caterings. These are all complementary streams based around the business that you're in, and they all feed each other. They all work in a way, so it's such a symbiotic, beautiful relationship that's the way to scale and to grow. So when I was looking in multifamily, that's what we're talking about, being a scalable business. You don't need thousands of units to become super wealthy in real estate. If you have a couple hundred really good units and you can create these multiple streams around your business, it can really accelerate the wealth that you're on and accelerate your path. So for me, The Honeybee was one of my favorite books that we wrote.
Wonderful, wonderful. And tell us a bit about your podcast shows. You have got 4 shows. Tell us about those.
Well, we do a how-to every week. I'm on 10 minutes every week just discussing multifamily. But AJ, to be honest, Jake's not on here. Good. My favorite show is with my wife. We do a show called The Julie and Gino Show. And I love it because I get to work with my wife. We've been married 25 years. And just to sit next to her, to be able to talk about family, to me, family is one of the most important things on the planet. Anyone who has a great family unit, who has a great relationship with their kids are just a mirror reflection of what they are. It doesn't always work out, but the chances are, if you love your kids, if you spend time with them, if you listen to them, if you nurture them, they will grow up to be really great adults. And that's what we need. And that's what we're trying to really emulate on the show. We're trying to show people the mistakes that we've made, the things that have happened that have worked really well with us. So the Julie and Gino Show is about family, communication. And for me, my slogan is, if you want to change the world for the better, go home and love your kids. It just starts at the house. It starts at the family. So that's been my mission for the last couple of years, to realize that a lot of things in the world can be fixed if we just go home. And as fathers, especially, I'm speaking for the fathers, you take responsibility of your children and you want to raise them and you want to be the role model for them. And what better way to share my shortcomings and my successes with others out there?
Wonderful, wonderful. There is much to learn about all these things from you, Gino, and I'm sure a lot of people would like to connect with you, learn from you, know more about you, more about your books, more about your shows. So what's the best way for them to do so?
Best way is to go to jakeandgino.com. And if you want to learn more about the Julie and Gino Show, just go to juliaandgino.com.
Wonderful. With this, it's a wrap on this very special edition of the KJ Masterclass Live. Thank you so much indeed for joining us.
Thanks, AJ.